One of the most attractive things about trading is that you get to write your own job description. You can engage the market in any way, shape or form that you wish. There are no rules imposed upon you by exchanges as to how you deal on them. Yes, there are rules relating to settlement and conduct, but there are no rules that say you must trade in X fashion. You must do this, you must do that. You decide how you will engage the market. You may decide that trading currencies on very short-term time frames, like this chart of the Aussie US in 5 minutes, suits you. You might decide that you're more of a portfolio trader where you take positions that you build over time in stocks that you consider to be trending stocks like Aristocrat. The vehicle you decide, the mechanism you decide is yours, and it is idiosyncratic to you. As they say, all roads lead to Rome, and all methods and all approaches tend to be profitable if they follow a few basic rules, in that they are reflective of market action, they are trend following, they have sensible money management, but more importantly, that they are truly idiosyncratic. They match your personality, they match the way you see the world and interact with the world, but they also match your why, because your why dictates how you will do this. Without a firm why, and asking yourself that question, and questions are a little bit of a theme of this presentation, you won't know where you're going. If you don't know where you're going, you won't know how to get there. There is a little bit of a problem with this, though. It all sounds very good. It all sounds very practical. The problem is all systems draw down, and it does not matter what the system is. It does not matter over what time frame you trade, how you trade, or what market you trade. Your system will always encounter drawdowns. You will encounter a cluster of losses. That is a reality. The unfortunate thing is that social media is polluted with fake equity curves that are linear in nature. This is what a true portfolio equity curve looks like. It has periods of drawdown. That is simply the nature of the way they function. These periods cause problems for the trader, and they cause problems because they start to wonder about their road. They start to wonder about the direction they are going in, and they begin to tinker, they begin to muck around, they begin to change things in an attempt to end what is a natural function of trading. There are ways to deal with drawdown. The easiest way to deal with a drawdown, if you want to continue trading, is to simply reduce your position size, and you keep reducing it so that it is at its smallest when your trading is at its worst. But a lot of traders struggle with that, and they struggle with that for the simple question that they have not asked themselves what they are doing here. If you ask the majority of traders why they want to trade, you'll get a simple answer of money. Unfortunately, that doesn't work. And it doesn't work because it doesn't resonate with the subconscious. If you want money, there are a lot of easier businesses to be in. There are other vehicles to pursue. It may be that trading suits your personality, which is a more complete answer. But you still have to ask yourself questions. One of the interesting things about good traders is they're constantly questioning. They question themselves, their psychology, their approach. They ask questions of the market. They want to know why they do things. A few days ago, I posted a question on the blog, and it's a simple question. It was this question. 2 questions to think about. Are you buying leveraged or unleveraged index ETFs? What are the reasons for your choice? What I found intriguing about this was this simple question led to a plethora of emails to me saying, "You've left something out of the blog." No, I haven't. I just wanted to ask you 2 questions. I wanted to get you to think about what you were doing, to question your approach, and to think about the way you see the market and how you want to engage it. My approach to teaching people has always been Socratic, and this is a legacy left over from my university days. I ask questions, and I ask questions to guide people in a certain direction, to get them to think. Good traders question why they do things. They look back at previous trades and they ask the question, why did I take that trade? Is there actually a trade there that conforms to my rules? So they effectively try and reverse engineer their own thinking to see if there are holes in it, to see if there are flaws in it. There may be flaws in the markets you are trading. There may be things that you have not considered. The unfortunate thing about the way people are educated is that they are simply told things. There is very little discovery. This is a problem because people get out of the habit of being curious. They get out of the habit of wanting to find their own answers with guidance, and when they get stuck, then asking a question. This is why newsletters or tip sheets are so popular, because they tell you what to do. What you're being told to do might not be appropriate for you in any way, shape or form, and it might be reflective of a completely different approach in psychology that you feel resonates with you. But you're still being told what to do, and so therefore that's easy. Working out what to do for yourself and learning to do things for yourself is actually difficult, and it is a skill that we lose, and we lose it because we don't practice it. My view of teaching is simply this, that you never give somebody, you are just a guide. You point someone in the right direction so that they can find the truth that is relevant for them. So the point I'll finish on is another question, which will probably trigger another plethora of emails. What is your truth?